This is a training session regarding payroll settings. In specific, we will cover the Standard Deductions section of the Payroll Setup Options program. To access these settings, select Payroll from the Setup Accounting Options menu, or just right-click on the Payroll menu icon and select Payroll Setup. Now we'll move to the Standard Deductions tab.
The system allows an unlimited number of deductions to be created in this window. To insert a new deduction or change an existing deduction, use the appropriate buttons at the bottom of the screen. Let's insert a new deduction and call it Group Medical Insurance. This screen allows us to enter the attributes of our new deduction. We can give it a number, a description, an abbreviation which will show up on the check stub, a general ledger account to which the money deducted from the employee will be sent during posting, and a deduction type. The type is either a flat amount, a percentage of gross, a percentage of net, or a dollar amount per hour. An example of a flat amount deduction might be a person having a flat $22 deducted from her check each pay period. A percentage of gross deduction might be a person having 2% of his gross pay deducted. A percentage of net deduction might be a person having 20% of his net pay being held for something like a wage garnishment. An amount per hour deduction would be calculated as perhaps $2 per hour worked. Here we can set up a company-wide limit. This limit will be used when this deduction is set up in an individual employee record. This limit can be overwritten for specific employees. The limit we enter in this screen is merely a default for entering new employees. If we enter a limit, we can indicate what that limit is based on. For example, if we put in a limit of $20,000, we can indicate the limit is based on the person's gross pay, which means that this deduction will stop deducting once the person's year-to-date gross pay reaches $20,000. Alternatively, we can base the limit on the amount of the deduction. For example, if we put in a limit of $800, the standard deduction will be deducted from the person's pay until the year-to-date deducted amount reaches $800. The deduction would then not be withheld in future payroll postings. This checkbox refers to a deduction whose limit is based on the amount of the deduction, specifically employee loans or advances. If the employee borrowed, say, $200 in October and would like the amount to be deducted from his future paychecks at $20 per week, the deduction would be set up as a $20 flat amount deduction with a limit of $200 based on the deducted amount. If this box is checked, each time $20 is deducted, the limit of $200 is actually reduced by $20. This way, the deduction will stop being taken at exactly the right time. Here we can indicate whether this standard deduction is a certified payroll assessment. Here we can indicate whether this is a direct deposit deduction. This means the amount deducted by this standard deduction will be placed directly into one of the employee's bank accounts. Here we can indicate whether this is a Section 125 deduction. If this deduction is meant to be reported in Box 12 on the W-2 form at the end of the year, pick which code will be used from the drop-down list box. Some of the amounts deducted from employees are meant to be paid out to a vendor. For example, if we are deducting medical insurance payments, we need to pay the insurance company. The system can create an invoice from the insurance company with a line item for payment of the amounts deducted during each payroll posting. If you wish the program to automatically create these invoices, simply enter the appropriate vendor and invoice batch here. We can also indicate the taxation status for amounts that are deducted using this standard deduction. To do this, we indicate which types of tax withholding this deduction is exempt from. As an example, we may have a 401k program and the amounts deducted for a 401k are exempt from federal and state taxation, but not exempt from Social Security or any of the other types of accruals. In this case, we would check the appropriate boxes as indicated on this screen. At the bottom of the screen, the system will allow for an employer match. The employer may choose to match the amounts deducted from the employee through this standard deduction. If this box is checked, the fields in the Employer Match section of the screen are enabled. Here you can enter the percentage of the employee deduction that will be matched by the employer. You can also enter a match limit. This limit can be either a percentage of the employee gross or a dollar amount. For example, if the limit is a percentage of gross limit and the percentage is 50%, the system will calculate an employer match of up to 50% of the person's gross pay. If the limit is based on a dollar amount and the amount is, say, $200, then the system will calculate an employer match of the employee deducted amount up to $200 per pay period. Here you need to specify a general ledger account into which the employer amount will be accrued. Lastly, you can enter a vendor and a batch if you want the system to create AP invoices for matched amounts.
So far, I have explained the settings for a standard deduction. This screen can also be used to set up an employer accrual. The difference is that an employer accrual is not deducted from the employee's wages, but is accrued as an expense to the employer. The description of the settings is the same as it was for the standard deductions, except for the fact that many of the standard deduction settings do not apply to an employer accrual, so they have been left off of this tab.
We'll save these entries by clicking the OK button. This ends this training session on setting up standard deductions.